You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the program here on the Options Insider Radio Network, where we break down all of the interesting trading activity and analysis and research and developments in the world of volatility. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding Options Insider Radio Network. We're up to 15 programs now, listeners. I know that's pretty crazy, including, of course, This Week in Futures Options, where we break down all of the amazing activity in the world of futures options. Pretty interesting stuff going on. We just recorded that a few minutes ago here.
TWIF is one of my favorite shows.
TWIFO. You're forgetting the O. This Week in Futures Options.
TWIFO. You got FIFO, LIFO, and most importantly, TWIFO.
TWIFO is the big one. We go for acronyms here on the network.
Didn't TWIFO just IPO this week?
It did. Huge money in the TWIFO show. Who knows? The show's only been on a month or so, and it already goes public. Crazy town for all involved. That voice is, of course, the greasy meatball, Mr. Mark Sebastian. Mark, welcome back to the Volatility Views program, sir.
Great to be here.
And if you can't get enough greasy meatball on this program, well, guess what? We got another one for you. Actually, he does. It's called The Business Show. It is the 15th program on the old network. You can find it wherever you find your favorite Options Insider radio programs, including via our app or iTunes or Stitcher or TuneIn or so on and so forth. You can also find it, of course, just by searching for The Business Show. Pretty generic names. You might have to fight through some search fields to get to it.
We tell people to search for The Business Show, Options Insider Radio, and then it pops up right away.
There you go. If you after that, or just if you search for us in any of the big major providers, they should have a producer page for us and should have all of our shows there. It should be up. Or of course, you can just grab our app. It's baked in there as well. A few episodes already out there for you. I believe you had some big guests, Mark. Vladimir Putin and Donald Trump, if I'm not mistaken.
I know. Putin, Trump, Dean Parsley. We've had some biggies.
So I think you've said you're going to bring world leaders and world powers onto the show, and you've certainly done that so far.
We might have to have David Cameron on.
He's got some time on his hands now.
Yes.
All right. With that, I think we'll get right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
right, and welcome to the Volatility Review. This is, of course, the portion of the show where we break down what's moving, what's shaking in the markets today. We are recording this. Unfortunately, no live stream today. If I sound a little bit different, it's because I am in the mobile studio here in scenic and sunny Florida. So bear that in mind, listeners. We'll be back to the live streaming in a couple of weeks. For now, you got to get it the old-fashioned way, on demand. We are recording this right about middle of the day, middle of the session here on Friday, June 24th. And, not a lot happening, Mark. I think we can just end the show right now. What do you think?
Boring day, boring life, boring whatever.
Of course, we are jerking, listeners. We are coming out of the heels, the teeth of the big Brexit vote, and what a sucker punch to the market it was.
Oh, my gosh.
All these, we were kind of joking about this last week, Mark, but all of these idiots who were bidding up the market and selling all this vol on the heels of one poll. We said, this thing is not done, not by a long shot, and I guess nobody listened.
No, and what's fascinating is that if you look at where things closed on Wednesday night, VIX around 21, something like that. It got as high as 22. VIX futures over 20. VIX had it pretty much right Wednesday night.
Yeah.
And then everybody decided to dump ski, and it cost them.
Is that the technical term?
It dump ski. I mean, if you really look at it, what we're looking at right now is an extra 40 points on the kind of off of the relief rally, 39 points off of the relief rally from that we had on Thursday. This isn't nearly as crazy as it might seem. This was kind of priced in, except for all of the people who unpriced it on Friday. Yeah. Shockingly unpriced it.
I've said this before. I've always joked that volatility traders kind of the most bipolar / schizophrenic / so determined that you will in the marketplace. They got to have it. They got to have it. Oh, they don't want to touch it. They don't want to touch it. And they kind of got in that latter phase towards the end of last week. And it was kind of a bit puzzling to me because there was still a lot more to go before we figured out what the hell was going on. Anyone who was I
don't get it.
Anyone who was that sanguine about dumping vol into the teeth of this thing, which by best estimates was kind of a pick'em, it just seemed crazy to me. I don't know where they were getting their models from.
And polling in Britain is notoriously awful. Notoriously awful. And yet they were like, oh, doody-doo, la-di-da, la-di-da, doody-doo.
Yeah, these people have
it was shocking.
You think they have a fiduciary obligation to have a little bit more in their back pocket than they clearly kept going into this vote. So now they're all scrambling to get protection. They're all crushing the market as we're recording this, listeners. The sell-off accelerating. It seemed like it might put the brakes on a little bit, but now accelerating again. As of about an hour ago, they're off about a little over 2%. Now most of the major indices off over 3%. The Dow, the laggard, only 3%. The S&P about 3.2, 3.1%. And the Qs have been leading the charge to the downside all day, off about 3.7% right now. The VIX up about nearly 7 handles. It kind of popped on the open about a 26 or so is where it opened. It got about as high as about 26 and a quarter. Then it started easing off, getting back down into the low 20s. It seemed like that initial reaction was kind of overblown, and now we're starting to get a little bit more volatility love again as, surprise, surprise, the market continues to sell off. Now, Mark, a lot of people I've already seen it. I mean, already out of the gate, I'm seeing the complaints. I'm sure you're seeing it as well. What is this? This reaction is far too muted out there in the VIX land. People were.
It's not.
I agree completely. But we were joking about this on our last episode. People were writing them up in some big major media articles saying, "Man, what a volatility explosion it's going to be if the Brexit actually happens." And we were talking about how a lot of that was already kind of baked in. So it's kind of interesting to see now people, of course, a lot of them holding upside calls in VIX, probably why they're so disgruntled. But still, what are your thoughts on how we've seen vol play out today?
It was interesting. They really tried to dump it on the open, just obliterate it on the open. And then since then, it has slowly rebounded. Last night, the July future was up over $10 at one point. It went from below 18 to 28. All right, Mark, let's think about the ramifications. How big of an increase is that? That's, let me see, 10 divided by 17. That's a 60% rally. I think we got up to about a 60% rally. a little bit further, and XIV has to discuss shutting down. And so, I mean, think about what that would have done. Oh my science. That would have exploded things.
That would have been crazy. I'm seeing Russell live tweeting a picture of himself over there at the NASDAQ in New York. So he's rubbing our face in it that he can't be on the show today. So we'll have to hold him accountable next week here with some photos of himself. But yeah, that would have been something. I mean, people were all upset when VIX had to shut down in those flash crash. XIV couldn't calculate any longer.
Nuts. It would have to shut itself down. So then that would have been nuts. Then the overnight session, we get futures limit down. Meanwhile, when that happens, that's when VIX really exploded, because that was the only way people could get in. And then, from there, we basically saw things kind of continue to soften. And, who knows from there. So, go ahead. That's kind of the fascinating thing is, where does all this land? Where does so that would be kind of the interesting piece. So it was just so then obviously the market rebounded from only down 5 to we're down 3. Overnight, VIX was, I mean, if the futures were up at 24, 25, they're right now around 22. If that was happened, then you would have had the VIX opening 28, 29, 27. So, that would have been really a fascinating open. Instead, we've backed off. We're off 3%. VIX has rallied throughout the day. It's now 24. I'm looking and I'm trying to figure out whether this is where we land, whether this is kind of weekend risk, because we've seen or whether, things get a lot worse. It's going to be really kind of fascinating to see kind of the direction things go from here.
Speaking of worse. Speaking of worse, we saw much worse even internationally as the international markets kind of felt the first body blow from Brexit. We saw the Nikkei off nearly 8%. That's the biggest drop they've had in about 16 years out there. The FTSE 100 off nearly 11% at one point. DAX off about 6%. The CAC 40 out there in France about 6.5%. The sterling. The pound sterling, 10% hit about a 31-year low out there in the pound sterling. We were talking about that on TWIFO earlier today. Just craziness out there in all things pound sterling. The euro off only a comparatively paltry, about 4%. Crude, doesn't matter your flavor, WTI or Brent, both off about 5%. The only thing really getting a gleam to the upside today, aside from VIX, is the shiny stuff, gold. Mr. Greasy Meatball up about 5% as we are recording this right now. So that's, of course, off the crazy highs they had last night, where it was off many handles before coming back a little bit today. So shiny stuff and vol apparently where you want to be today, Mr. Greasy Meatball. Surprise, surprise.
Yeah, I mean, vol doing real well, the shiny stuff doing real well, and that's about the end of it. SKU. This is not a day where SKU gets sold.
Yeah, no.
Shockingly, they're not out dumping SKU today, folks. They're still interested in that for some odd reason. Who'd have thunk? But we are seeing just vol move in really odd and interesting ways. This has been fascinating to watch. I mean, the low tick on the day. No, Mark, I know you've been out and about. Where do you think that, without cheating, where's the low tick on VIX today?
The low ticks on VIX. I did look earlier this morning. I thought I looked for one of our other shows, so I think it was. I'm trying to remember off the top of my head. I think it was in like the 19 range, if I remember.
Yeah, it was like 1950.
Yeah, that seemed pretty. That seems pretty aggressive to me. Again,
it looked like everyone was like, forget it.
Yeah, it's all done. We don't need to hold any of this vol we've been holding anymore.
Yeah. No.
Yeah, those are the same people who were crushing it off of those polls last week. I don't understand that mindset. I mean, maybe you can argue the other side of that coin too, to play devil's advocate. You could clearly say that maybe some of this is overblown because it's impossible to digest all the ramifications of this, and it's only been about 12 hours. It's going to take years for all of this to be sorted out, all the various minutia of how they pull out and how the deal is done and which model of exiting they choose, and if other countries decide to follow their lead and leave, that could exacerbate things or not. So it's really, there's a lot of, the devil truly is in the details. So the notion that we could somehow process this in a dozen hours is kind of silly. But on the flip side, you could certainly say that there's not an argument to be made for selling a lot of vol on the heels of this.
No.
I just don't see that argument at all.
No, this was all silliness. I never quite understood it. But you're kind of looking at it and, do we think that the July future 22 is fairly priced? Yeah, with what we've got today, this is a 3% move. If we're going to see another a couple of days of 2% moves, VIX is pretty fairly priced. Now, if we then see Monday, things are slow, not a lot happening, and into the 4th of July, I could see them stepping in and trying to dump. And, right now we got the VIX around 2370. I could see things dropping off into maybe the close as we calm down a little bit. But I don't see a lot of reasons for VIX to settle below 20 until we figure out who's going to be the leader of the other party.
Yeah, that'll be
who, what are some of the ramifications? Where are they going to go? I think that's going to be the key.
One of the interesting things on this, to get to do a deep dive into British politics, but it seems like all of the regions in Scotland all voted to stay, and they, of course, get that rug yanked out from under them now. So now that's revived the argument of whether Scotland should stay or go. So that could potentially exacerbate things again. They may try push for another vote on that. So a lot of other interesting items to be discussed. Of course, next week has the interesting, at least domestically here, has the interesting rub of going into a long holiday weekend. So how that will play out, again, that'll have to factor into our crystal ball forthcoming here. Of course, we're always talking about the impact on volatility and the volatility of volatility. Though, as you might imagine, that volatility of volatility, aka the VVIX, skyrocketing yet again. We're on the high end of our recent range, right around the 128.
Yeah, 128
right now.
Crazy.
That's showing that there's a lot of froth, a lot of stuff going on out there in those markets. I don't know about you, Mark, but when you see a number like that, does that scream to you, hey, I got to sell this vol right now?
It's getting there. It's getting there. Not quite, but it's getting there. Here's what I can say is that I definitely see a lot of people riding both sides, and VVIX is at panic levels, even if VIX maybe isn't. So there's heavy demand for VIX options, if you will, right now on both ends. Actually, again, lots. I know you're off out and about, but it's not like we're seeing a crazy amount of VIX call buying. Calls are only exceeding puts about 1.8 to 1, and there's been a lot of premium buyers on the put side, not just calls. The biggest trades of the day was the July August 20 put spread.
Yeah, I saw that.
All right, and we saw now on the other end, there has just been a fanatic seller of the October 15 puts. The guy has just unloaded thousands and thousands and thousands of these. It's been fascinating to watch, his process. But that has been the kind of the bulk of everything I've seen.
Yeah, it's funny, and we'll get into that a little bit in the overall volume discussion for VIX, and of course for the put spread is one of the few. That was one of the ones that definitely got on our radar. I'm looking here at a chart of VVIX while we're talking, and obviously we hit some ridiculous levels last year in August in the flash crash. But aside from that, ridiculous outlier, we really haven't seen these levels in the VVIX since about December 14th of last year, to be precise. Hit about 135 on the VVIX. That's the last time we really kind of floated in this relatively rarefied air from a volatility of volatility perspective, which kind of makes you wonder if this is indeed the other shoe, or if there are more shoes to drop forthwith. And you mentioned the volume out there, kind of not breaking down, as you might expect in the overall VIX. And that's exactly kind of what we discussed on the show last week as well. It was kind of that coming out of the heels of everyone buying the market, selling off volatility. People weren't touching upside calls. It was kind of a bit of a mystery. And we're seeing a little bit of that again today with, you're right, only about 2 to 1, not even 1.6 to 1 calls over puts out here in today's activity, which is kind of a bit bizarre if you know that anything about how VIX usually plays out. In an event like this, in a day like today, it's usually kind of, especially on a day when we've seen so much move to the upside and then sell off, usually it's all calls all the time. It's a very kind of one-sided paper flow, and we're not seeing that, which is kind of interesting. Maybe that's a good cue then to get into our VIX options discussion. It's a strong volume week, clearly, but perhaps maybe getting back to that argument, some people are a little bit underwhelmed by what they're seeing out there in VIX. Not knocking the doors out of it. We haven't put up 1 million contracts already by mid-session today. It's only been about 580,000, which is about the ADV. So doing the ADV by about noon central is pretty impressive. But it's certainly not 1 to 2 million like we saw just a few weeks ago out there in VIX options land. So that again, maybe
VIX
some
futures may get near breaking records. They're already at 380,000, and that doesn't include, I think, the overnight session. You know how many contracts trade in the overnight session?
Usually it's about 10%. Was it more? I imagine it might be more than that.
180,000 in the overnight session.
How many?
180,000.
Wow. That's got to be a new record for them percentage-wise and volume-wise as well.
Volume-wise, yeah. And on the day, I'm seeing 380, but that might not be. That might just be during the live session.
That's kind of what they've always said.
So there is some.
The overnight extended hours volume accounts for somewhere between 8 and 10% on a given day, and then you get those outlier days when something actually happens in that region. That's clearly when something happens in those time zones. That's when it's a huge driver for volume, and clearly this did. So yeah, that's a huge feather for them.
Yeah.
To see that kind of number going up in the extended hours. Otherwise, you're right. You would have had to wait till the U.S. Open. It would have been probably a muted response by then. People would have gotten what they needed maybe in V stocks or somewhere else, or just waited and done some other products. So it probably would have been a more muted response to the fact that they had a product out there listed and trading and disseminating. That's a valuable thing for them. Yeah, overall, and the rest of the week from an options perspective, it wasn't maybe the barnstormer that you might expect, given everything that was on the line this week. We saw about 700,000 contracts on Monday, and then a pretty paltry 392 on Tuesday, about 700,000 again on Wednesday. Yesterday, about 600,000 going into the big vote, and then today we're at about that same level right now so far. So not overall perhaps the multi-million contract days that you might have expected going into this. But again, the day's not over. The other shoe has clearly not dropped as this sell-off continues to exacerbate itself. So we don't know how it's going to play out, all said, but still interesting stuff. Not to spoil the top 10, of the hot strikes here, but there are some puts to be found there. Before we get to that, let's break down, like we said. What was that, Mark?
I said, yeah, you're right.
Today that put spread was the July Aug 20 put spread was who would have thought on a day like today with all the other stuff going on with VIX, Brexit, everything else, that a 20,000 lot of the July Aug 20 put spread would be our top trade of the day today in VIX options.
I know, isn't that great?
That's just kind of shows you where we are from an overall volume perspective, and a lot of people still trying to figure out exactly what the heck to do with this news and how to process it. The puts leading the day, July Aug 20 put spread going up 20,000 times. Paper buying that spread, so buying the Aug, selling the July, doing it for about nearly 50 cents, 45 cents, something along those lines. I also saw puts kind of leading the charge on Thursday, too, with some of the biggest blocks again coming. On the put side of the fence, the July 15 puts going up 20,000 times for 63 cents. The July 17 put spread looks like going up as well, about 10,000 times yesterday. Looks like selling the SEP, buying the July, so perhaps a bit of a roll out there. It's always always hard to tell with VIX because there's so much OI obscuring every single strike that is available out there. Speaking of strikes, looking at what's lighting it up this week from an overall top 10, the hot strikes out there in VIX land. Number one with a bullet, still the July 30s. That's still where the lion's share of the OI rests its head. About nearly 450,000 contracts open out there of the July 30s. Falls off a cliff. If you're hearing a little construction there, listeners, they're doing some construction outside our mobile studio here. Hopefully that's not bleeding through. Number two, I'm trying to remember, Mark, the last time we had to put as a number two on our top 10. It's been quite some time. Number two is a put. The aforementioned July 15 puts, 335,000 of those bad boys open. Take the number two spot with just a huge surge. Number three, about 250,000 of the July 16 puts. So 2 and 3 are puts this week, Mark. Put that in your pipe and smoke. And number four, 242,000 of the July 25s, always a popular strike and month out there. Number five, 211,000 of the July 23s. Then number six, we fall off a bit, 181,000 of the July 22s. Then it's more puts pretty much all the time, almost till the end. The number 7, 8, and 9 spots on our top 10 are all puts. The July 17 puts with about 170,000 of those bad boys open, followed by the July 14 puts with 157,000, and the July 18 puts. So pretty much the whole put strip in July is in the top 5, or top 10, I should say. 150,000 of those on the number 9 spot. And rounding out our top 10, the July 27 calls. Also looks like, all July this time around. Again, not surprising given the fact that so many of the events in the market right now, very near-term focused, 145,000 of the July 27 calls. Round out the top 10, about 6.47 million overall total open on VIX land, about 4.09 on the calls, about 2.4 or so million on the puts. And before we run out of the Brexit stuff, I was looking at an interesting list, Mark. Maybe we'll see if you want to play a guessing game. They list the top 10 names in the S&P 500. Actually, how many is this? 1, 2, 3, 4, 5, 6, 7. Top 7 names in the S&P 500 that are getting the worst hit after Brexit. You want to guess a couple of them, see if you can? Some surprises in here. I'll give you a hint. There's some surprises. I'm going to
say banks.
Yeah,
obviously. And then
any particular bank springing to mind?
Well, let's say JP Morgan and Citibank.
Yeah, not bad. Morgan Stanley. So you had a Morgan in there. And Citigroup both off about 8% today, taking it on the chin. The worst, almost 10%, is Invesco. Apparently, they get about a quarter of their profits from from the UK region. Borg Warner, also another one, off about nearly 9%. And then Morgan Stanley and E-Trade, surprisingly, off about 8%. I haven't had a chance to dig into them.
I didn't know that E-Trade did big.
Maybe there's some other news at them. I didn't realize they were such big players in the UK.
They might not be.
Maybe they had an acquisition along the way that gave them a lot of accounts in that region. I'll have to dig into that. Also, Schwab, about 8% off there as well. So clearly both of them being directly impacted by this Brexit. And then on the bottom of the list there, American Airlines, 7.5%. I think you can probably intuit some of that as well. And just to show you how brilliant our audience is, or perhaps not so much this time, Mark, we had them. Our question of the week this week was, hey, Brexit's coming up. How do you think they're actually going to vote out there? We gave them 3 choices, Mark. We said they can vote yay or nay, or I'm sick of Brexit. The results are in. What is your vote? Well, maybe what is your vote is kind of moot now. But what do you think won? What do you think won? Let's just say that.
I'm sick of Brexit would be my
I threw that in there as a nice little cherry for everyone who is sick of it. I know a lot of you are sick of it. That got a pretty healthy vote, about almost a third of them voting for that. But actually, nay winning the day with about 43%. So that shows how much our audience overlaps with the British voting public, which is not that much, apparently.
Well, I mean, there's a lot of reasons, there's a lot of reasons why, this isn't that huge of a deal. But it's going to depend on whether cooler heads prevail. I've made the argument that the U.S. and Canada should step in and immediately go to the British and say, hey, we should open up a free trade agreement with you guys. I mean, they already have one with Canada, which makes sense.
Yeah, they have some history there.
And then go from there.
There you go. So they'll jump from out of one union and into another, out of a frying pan.
Well, I think if they look west, it's not like the U.S. is going to push immigration and free movement.
We're not going to send a lot
policies
of U.S. citizens to Britain anytime soon.
Yeah, and they're not going to force. U.S. isn't going to dictate. I mean, the biggest reason for the Brexit was not the economic side, but
there's all the social issues,
control and the migrant side. That was the big push.
Yeah, that was certainly a surprising rallying cry for a lot of people over there in Britain, and it seems to sucker punched a lot of people, including Cameron, who weren't really expecting people to get that motivated off of that stuff, and apparently
they do.
Apparently he was wrong. Yeah, I guess you maybe think that maybe the rise of Trump over here would have clued him into that fact, but apparently not. Interesting stuff.
Is correct.
Interesting stuff here. I think we're going to keep on rolling. Give you guys a chance to take the wheel a little bit this week with some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome back to the Volatility Voicemail. This is indeed the portion of the show where you guys get to dictate the questions, the comments, the talking points that we debate and discuss here on the old program. And I'm just looking here, going through your heap of stuff. I love our listeners, Mark. They send in. I mean, we had that epic treatise a few months ago about a new product and with graphs and charts and citations in it. We got this one today. We got some of them here with charts again.
Nothing better than charts.
This one came in last week. I don't think we had a guest last week.
You always need to ask Mark who charted.
Yeah, this one didn't have a chance here. Really, I'll actually make sure you get a link here, Mark, so you could view the chart for yourself. As we are discussing this, let's go really quickly. The magic of live radio, listeners, at least live for us. You get to see how the sausage.
Oh, are we not on our normal chat room thing today?
No chat room today. We just didn't. I don't think the remote studio bandwidth could handle it without exploding. Kind of like some of the VIX products today we're close to exploding. We're pushing it as we are, without anything else. Here, I just sent you the link, Mark. This question comes from. And I apologize in advance for horribly butchering your name. This is Trong Hai Jean Wen. There we go. And hopefully that was close. He writes, hey, what the F? I'll just leave out the last part of that. Hey, Options Insider, I would love your detailed thoughts. He wants detailed thoughts, Mark. On the VIX futures curve as of June 15th. This is, again, as I said, from last week.
Oh, as of June 15th.
Yeah, this is from last week, so we didn't have a chance to get to it on last week's show. He said the spreads across the months
now as opposed to the 15th.
Yeah, the spreads across the months look tight. He has a nice graph for us we can follow along. Spreads across the months look tight, as is the VIX VXV spread. I love your work. So, yeah, he put a nice little chart. We'll have to include it maybe in the show notes for you listeners so you can play along. But he is kind of right. At the time of this chart, things were fairly tight. You can see a nice little pop out there in the Jan time frame, and then that's kind of about it. Everything else is kind of fairly tight as he describes it. I think he was kind of a little bit surprised given the fact that we were coming off last week, coming off the heels of FOMC, and, of course, staring down the barrel of what would become an FOMC. I think this is kind of related to what we were just talking about earlier in the show here, Mark, about how people were last week maybe surprisingly complacent. Obviously, maybe a little bit too much so going into this vote, and now they're kind of feeling the side effects of that. You think this chart kind of reflects that?
I do. Think especially by the 15th. I mean, we saw a real pop on the 13th, and then a pretty aggressive back off from there. And you and I were commenting. I think we even said it on last week's show. Or prior to that, the reason why I said VIX to 18 was because I thought a Brexit risk was high. And then last week on the show, we were at around that level. And what were we, about 18, 19, 20, actually, I think. And then, of course, they gave it all away on Thursday. Thursday's price action is going to go down as some of the stupidest order flow in history. I mean, in human history. Now, as I look at the curve, I look at a curve that is it's backward but relatively flat. So what we've got is obviously the weekly futures are all backward, all the way out to the July 27th. July is over August, but August is actually a touch below September. So there is still some kind of kinkiness, and this trade is still, if you go by not the numbers, but if you go by the curve, the expectation is that sometime between the end of July and the beginning of August, markets will calm down. That is the way this thing is pricing itself.
I agree with you on that paper flow from last week. It's kind of up there in my mind with the Soros funds all piling into tech in about Feb, March of 2000. That kind of just legendarily poorly timed paper. And yeah, last week I think we were all appropriately skeptical, and now this week, as we see what comes to pass, that's certainly the reasons for our skepticism come to pass. So yeah. I won't butcher your name again. We'll just call you Mr. Wen. I thanks for your chart. We agree with you. It is kind of surprisingly tight, as well as the VIX VXV spread also very tight. Surprisingly so, and I think we saw the ramifications of that this week. But great question. Thanks for the visuals. We love visuals. If you guys have visuals in your questions, feel free to send them in. Let's move on to one here from JVon. He or she writes, "Hello, Volatility team. I've heard you discuss the short VIX ratio call spread," and he puts in parentheses, "sell one around at the money, buy two out of the money," many times. Of course, we have talked about that many times. That is one of our favorite ploys in VIX land. He goes on to say, "I've heard you say it's a great strategy, but it doesn't work in all scenarios. What are some scenarios where this strategy falls apart?" We don't have to look too far for a strategy where this falls apart, Mark. Just look I think we were talking about it about a week and a half ago. We had already seen kind of that near-term, this is before the sell-off, we saw that near-term spike in VIX. And when you see that, and when the futures get kind of backward and crazy and then the front portion, that's kind of where that spread initially, if you don't have it on already, if you want to come in and set it up,
lose, right?
That's because you're right. Because when you want to do that spread, you're selling one at the money buying, you kind of want to do it for, at worst, even, maybe if you're lucky, a little bit of a credit. In those kind of crazy backward moments when the thing's already popped, kind of you missed your moment there. And then, of course, you're going to – I was looking actually – some people asked us the same question about a week and a half ago, and I was pricing up some 1x2s in VIX land, and the best you could do was substantial debits. And that's a scenario where you're like, this is not attractive at all, and
the key is going to be VVIX in kind of figuring it out, because, with – obviously most of our listeners aren't sitting there looking at VIX skew charts all day and things like that. But VVIX really does incorporate, like VIX, skew and volatility kind of across the curve. So generally speaking, that 1x2 ratio, if you're using it a hedge, it's going to work really well when VVIX is below 90, or it's going to work when VVIX is below 90. It's going to work really well when VVIX gets to 80 or lower. All right, that's where it kind of has its home run potential. That's why it works so well. All right, as I've been writing a weekly research note for clients of Tullett Prebon, and a couple of weeks ago I was pounding the table. You can sell the 19 and buy the 23, so $4 wide, Mark, for even money on a 1x2 ratio. How do you think that trade's working right now? It's up nicely. Let's just put it that way.
Even money, that's probably a nice.
That was a win. $4 wide. All right, and it was higher than where it is right now. I mean, right now you could sell it. The interesting thing is you could sell it at $1.30. You could have sold it at $1.30 on June 13th when we had that big run up. So when VVIX gets really low, that is when that 1x2 trade works. When VVIX gets up here, this is when traders are actually looking for the other side of that trade, the buy one and sell two. And we are seeing some of that paper flow hit today. We are seeing some people step in and try and slap the curve. My guess is if we get another leg higher on VIX, which is entirely possible, that will be by far our biggest trade on the week next week if we do get a leg higher from here.
Yeah, the opposite side of that spread is lining up kind of nicely right now, as we are, of course, right now as we're recording, very much in the teeth of another hard VIX rally, and all the other factors lining up. We got a related question here from BB Wins. Let's get into that one as well.
I mean, Mark, what do you think of, like, you could actually do the 37.5 1x2 for even money.
I'll say you probably get that for even
short
right now.
Two. Yeah, long one, short two.
Well, yeah,
that's a nice trade.
That is nice for even money. Yes, I like that. As
that
opposed
is one
to
that
like
I
a
would look
$1.50
at
outlay or whatever. Yeah.
Right. That is one I'd look at coming into Monday.
So there you go, and flipping the script a little bit this week. In these kind of crazy moments when things are very juicy, you want to look the other side of the fence. You don't want to be selling one, buying two right now. Yeah, similar question from BB Wins. Everyone's got ratios on the brain today, Mark, or this week. He says, can you give me an example of good strikes for the VIX 1x2 ratio spread? Should I use open interest as my main factor when selecting strikes?
Why do people get so obsessed with open interest?
I don't know. It is weird.
It's really weird.
Particularly in VIX, open interest is perhaps
and
perhaps the most moot it is in any product in VIX, because there's so much open interest that there is really no determinative value whatsoever in OI. So yeah.
I mean, you think a market maker sitting there, and I'll tell you when open interest matters. So if there's high open interest and you're trying to close something at a nickel, you might have an easier time, one way or the other. The rest of the time really doesn't matter. You think a market maker who's long the 30 calls, if you come in to buy the 29s at a good price, he's going to be like, well, I don't get to close my 30, so I'm not doing that. No. It's silliness, Mike. Silliness.
That's kind of the argument I've always had against stupids. Market makers aren't fools. You come in on one strike, they're going to adjust the other strike too. It's not how it works. But that's an argument for another day. But you're right. Yeah, open interest is nowhere near the driving factor that you may think, particularly on a product like VIX. I mean, you notice we hardly ever mention the open interest on any of these strikes we're talking about because it's all huge. It's all a quarter of a million contracts or more usually. So a
lot of these are just crazy. I'm looking, Mark, from the July in calls. Let's ignoring, if we look at up the line, out of the money, into the money, puts to calls, and now mind you, we've had a huge day today, and the open interest on the July 14 puts 160,000, 15 puts 330, 16s 250, 17s and 18s and 19s all around 150, and then if you flip, you then go to the 19 calls, which are over 100, the 20s, 100 and quarter, 100. I mean, it just there's all the liquidity you could ask for. Say what you will, but I would say one of the great arguments for keeping single list names is that you actually get way better liquidity when you need it, because everybody is going to be there. And they're required to be there. It's not like these exchanges where, I have the ability to hide things. And so, despite the fact VIX is flying around, markets are 10 cents wide to a nickel wide. And in a lot of other names that are multi-list, they don't look nearly as appetizing.
And by single list, obviously you mean listed on one exchange versus listed on every exchange, and people can kind of scatter a little bit if they need to in those products. Yeah,
right.
When you have one place to be, you kind of got to be there, and that is one argument. Of course, the counterpoint to that is all the technology risk and shutdown risk and everything else that goes along. with that. The SEC tends to take a dim view on that these days, but that's a conversation for another day. But still,
I think that the solution to that is, when the technology goes down, allow the market makers to continue to trade just like SPX. I know it sounds shocking, right? But you think those guys won't trade?
That sounds interesting. I'd be curious to see if an exchange would go for that argument. Of course, we see something analogous to that on the future side of the fence now when they go limit up or down, and you still have to kind of print the options without the futures. You have to do a lot of synthetics. You can kind of play that way too, I suppose, if you had to. Of course, if the platform's down, it's a completely different story. Nothing's trading them, and that's kind of what they're worried about. But yeah, interesting stuff. Let's get to the end here of BB Wins' question. We kind of answered it for you the first part. Yeah, you don't want to be lining up 1x2s right now. You want to be looking the other way. You kind of missed your. Hopefully, you had this trade on already, and it worked out really well for you. Now you want to take it off, and you want to go the other way. Mark was just outlining. What were those strikes again, Mark? You were looking at the buy one, sell two.
Oh, buy one, sell two. I was just pointing out the 30-37.5, or the 30-37.5 for a slight even money or a slight credit, and then you've got so if he's looking to hedge, you got to say call spread is the way to do it, not some sort of crazy because there's nice skew above 30. When you break out above 30, skew starts to get kind of a little more expensive and a little more fun to trade.
Yeah, a little more fun, I think, is a good way to put it. And we've obviously already debunked the second part of your question. Open interest is not as meaningful, particularly in a product like VIX, where good luck making sense of any of that open interest. There's hundreds of thousands on every strike. It's kind of moot from a strike selection standpoint. All right, great questions, everybody. Now we're going to keep on rolling into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the program where we break down what is moving, what we're shaking, and what the volatility gods hold in store for us. I should say we attempt to divine what the volatility gods hold in store for us. It's not always a, shall we say, successful as it was with last week when we were all kind of prognosticating as to what would happen. Of course, today was a big question mark because we were coming off the heels of the Brexit announcement. It seemed like the market was really fading the Brexit. They were going the other way. They were crushing vol.
Yeah,
it seemed like everyone was kind of leaning that way. So it was kind of hard not to get swept up in that as we were making our picks, even though a lot of us were still leaning a little bit higher. Russell leaned the highest with his 18.5 level. So I guess by default, he's the winner. Mark, you were kind of fading the other way. You were fading Brexit hard.
Yeah.
You were going a stout 15. A nice 10 handles or so, close to below where we are now.
Yeah.
And I was kind of the Goldilocks porridge of the week. I was about a 17. All of us clearly
way off.
Clearly underselling the sucker punch that was the Brexit. Even though all of us thought it was going to be close, and we thought there'd be a little bit more vol, but not. It would eventually come off after that.
Yeah,
not what we're seeing.
I think that Russell's thing was that it's not as big of a deal. That's not why we're selling off, and that markets are still going to have problems. Mine was, well, that is why markets are selling off, and they're not. There's no way they're that dumb. And you were like, well, I'll just ride the middle.
Yes, exactly.
That was what happened.
Those were exactly my words. Well, you guys I gave you the dubious honor of going first, and that's what happens. Sometimes someone has to make a show of it at the end of the day. Speaking of making a show, since Russell isn't here, we'll give him a first pick, and we'll pick for him, and we'll make a nice shameful pick. I think he's going to feel that next week all of this will be sorted out, and all of this volatility will be a moot point. So I think Russell's going to fade some vol next week to the tune. He's going to pick about a 12 in the VIX cash. That's what I'm giving him. So there you go. That's what he gets for missing the show today. He gets a nice whopping 12. I wonder if he'll appreciate that. Probably not. All right, as we move on, I'll go next because you always get angry when you got to go first. Let's see. We got right now, as we're recording, listeners, VIX hovering about a 23.25. Right now, of course, we have a big holiday weekend we're coming into next week, so that may or may not play a factor. Again, we have a lot of other shoes to drop in the meantime. I'm going to say we're going to be lower than these levels, but not crazy, appreciably lower. I'm going to give us about a 21.5 for this time next week. So there you go, Mark. You got a nice range there. You got Russell on the downside at 12. You got me.
You gave Russell 12?
Yes. You got me.
I was going to give him 30. I was going to give him 30 because I know he's Captain Paranoia, world's ending.
Well, that's why I wanted to go the other way to make it even more deeply insulting.
I'll take 20. I'll take 26.
26. Wow. You think you're going to get a little more before the end, before it starts coming off, huh?
Yep, that's my thought.
See, the question, though, is you got the long weekend next week, so that might start playing. If people were willing to sell vol last week with the vote still ahead of them and still willing to sell it this morning after the vol, then what the hell are they going to do with a long weekend ahead of them, you know? I
don't know. I think that there might be I think there's going to be a little bit of fall through on. I think there's going to be some shaking off and shaking out on Monday.
It could possibly be. We shall find out, sir. That's what makes the show interesting. Unfortunately, speaking of shows, that's about all the time we have for this episode of Volatility Views. A little bit shorter show, as I said, this week, as we are all on the road, running around, still making heads or tails here of this madness that is called Brexit. But before we go, Russell's not here, so I'll do his plug for him. Of course, head on over. We do all of this data we get throughout the show, listeners, comes from courtesy of our friends. In fact, the show comes courtesy of our friends over there at LiveVol. So check out their data shop, datashop.cboe.com. If you're listening to this show and say, hey, I'd like to get some of that data for myself, but maybe I only want I want a couple of months or a couple of series or a couple of years in product X or product Y, that's the place you can go and price it up a la carte. And if you have questions or they have an issue, you have a product they don't have or you want to see listed in there, contact them. I know they're pretty willing to work with. They want to hear from you guys. I've been talking to them. They really want to see what the reaction is to this data shop and how people are liking it. If they don't, what they don't like. So if you see something there you like or you don't like, let them know. They want to hear your feedback on this. That's datashop.cboe.com. And Mr. Greasy Meatball, before we go, while you're typing furiously, what is coming up in the land of the pit?
Obviously, besides the business show, we've got our professional trader summit in Chicago. Come see me and Mark. Come see Russell. The whole shebang. It's going to be a great time. You can, it should be a lot of fun. Come out and see us. Mark will put the link in the show notes, and we'll go from there.
Sounds like a plan. Listeners, come see us. If you are going to be in Chicago, the mobile studio will be back to Chicago by then, so don't worry. Check it out. And on behalf of the Greasy Meatball and even Mr. Corner Office, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great and detailed questions, complete with visuals. Keep them coming. And we'll see you next time right here on Volatility Views.
Volatility Views is brought to you by CBOE LiveVol. CBOE LiveVol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE LiveVol offers a broad spectrum of advanced trading technology, including the LiveVol X, next-generation execution platform, and LiveVol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.